Do you know what distinguishes good traders from bad traders? It is the ability to get back on track after a really bad losing period. I would like to show you 8 simple tips to recovering from a drawdown like a trading professional. Those tips will help you survive and recover from a bad period. Next time you are having a tough time, you won't just blame the strategy, markets, broker or yourself. You will know exactly what to do, and you will follow these steps to get into profitability again. Tip number 1. Go through your journal notes. I know I said it many times and I may sound like a broken record, but having a solid trading journal with notes is really important. It is because when something goes wrong, you can look into your notes and you will usually be able to tell pretty easily what you are doing wrong. A few days ago, I received an email from a member of my trading course. He wanted to improve his trading and he sent me his trading journal where he marked all his trades along with brief comments. Within just a few minutes, I was able to see where the problem was. By the way, he was trading around the news, so I recommended him using forex squawk service and being more careful around the news. Apart from the news, everything seemed more or less fine. I also need to say that the member himself was able to pinpoint his problem using his notes. He was just asking me for his opinion and for confirmation. That's what I call a job well done. You have a proper journal, and when a problem occurs, you go through your notes and you work on your weaker spots. That's the way to go. Needless to say that without a journal, traders in this situation are left clueless, not knowing what happened and what to do. Tip number 2. Go through screenshots of your trades. I think it's really useful to take screenshots of your trades and then go through them from time to time. Making a screenshot takes literally no more than a minute. If you want to write some short commentary, it takes maximum 3 minutes. Many people don't do this, and yet screenshots are so helpful, especially when things turn bad and you need to see what's wrong. Screenshots are really helpful because you look at them and you immediately see the whole picture. It doesn't really take much time or effort to go through, let's say, 30 screenshots. Still, a 30-minute period in which you go through screenshots of your trades can really be an eye-opener. If your strategy took a beating, I suggest you go through your screenshots and focus on 2 things. First, focus on things that you did right and that worked. In other words, notice how you are trading and what trades you took when all went fine. Write down the things that you did right. This is really important to focus on the positive things, not just on the negatives. In the future, try to do those things that you did right purposefully again and again. For example, imagine you held your position until it hit your full profit target, even though you were tempted to close the position sooner. That's really great that you were able to hold it. Write it down and next time do it too. Number 2 is that you should focus on your bad trades and trying to find mistakes. Sometimes there will be trades that were just fine and that still ended up as losers, so don't worry about those. What you should look for is trades which ended up as losers because of some mistake you made. Write down those mistakes and avoid doing them in the future. For example, are you a gambler and you hold your trades during macro news releases? Then go through your trades and see how much that cost you. Write it down and never trade the news again. Tip number 3. Trade only your best performing instrument. When things turn south, you really need to focus on what works best. This way, you will be able to regain confidence and also recover from your losses. To be able to tell what your best performing instrument is, you need to keep good statistics. For me, the best performing instrument is the euro dollar. I think it works so nicely because it's the most liquid forex pair. My friend and member of my trading course Ziggy wrote a really helpful article recently. In his article, he presented a method that focuses solely on trading the euro dollar. It is very interesting and I recommend you read it. It's on my webpage in the articles section. Tip number 4, lower your trading positions. Has it ever happened to you that you were in a drawdown so big that you were afraid to place more trades? I bet it did. It happened to many traders, myself included. In trading, it is essential that you feel comfortable even when taking losses. Being afraid to enter a trade is certainly not very comfortable. In a case like that, you need to lower volumes of your positions so you feel more comfortable and not afraid to open another trade. This way you will regain your confidence and you will slowly start digging out of the drawdown. You can start using normal positions when you feel confident and comfortable again. Tip number 5. Don't stop trading. When a trader takes a beating and he's afraid to enter new trades, then it feels quite natural that he wants to have some rest. It sounds logical, but this is what usually happens. First, the market conditions change and the market plays in favor of his strategy. The trader misses a lot of winning trades. That's Murphy's law and it works perfectly in trading. The second thing that happens is that after his rest, the trader feels okay and he takes his first trade, and guess what? A loss. And he's back where he was before the pause. He's afraid again to take another trade. Does this sound familiar? If you really feel you need a rest after you took a beating, then have it by all means. But don't jump into trading with full positions right after that. Lower your volumes and get back to full positions only when you really feel confident and back on track again. This way you won't feel discouraged immediately if things don't go the way you expected. Tip number 6. Don't look at the scoreboard. The most frustrated and unfocused traders are the ones who look at their equity and trade results too often. What should really matter most is the perfect execution of the next trade. There is a little trick I invented. The trick is to set your profit or loss column in your trading software to show only the pip count and not nominal win or loss. This way, you won't get distracted or overwhelmed by how much money you are up or down. You will only see the number of pips. This way, you will be much calmer and it will be much easier for you to follow your trading plan. After some time, it will start to feel almost as if you were trading a demo. And that's what you want. You want to feel calm, relaxed, and clear-headed. Looking constantly at your scoreboard to see how much dollars you are currently up or down doesn't really help. You can use this method all the time, but where it shines the most is when you struggle. Because when you struggle, you start to fear to take the next trade and you fear to lose more money. Looking at the pip count instead of the nominal value takes a big chunk of stress off your shoulders and it helps to think clearly. Tip number 7. Don't jump from strategy to strategy. I found out that majority of problems that traders have isn't in a bad strategy. It is their impatience and their inability to follow the strategy and its rules. Don't be naive, trading isn't easy. It isn't like you find a holy grail strategy and it starts making you money from day one. In fact, you need to learn the strategy, get a feel for it, learn the rules so they feel natural to you, and you need to learn to execute the strategy flawlessly. Only then it will all start to work for you, not before. Obviously, all this takes time, so don't be impatient. You will learn it and it will all come to you, but you need to give it some time. If you jump from strategy to strategy, you will never have the time to learn anything properly. You won't be making any consistent profits and trading will become frustrating for you. What you should really do instead is that you should focus only on one strategy or approach. This strategy needs to make sense to you and you need to feel comfortable trading it. Tip number 8. Switch to a higher time frame. If you are new to trading and you jumped right into intraday trading, then let me give you an advice. Switch to higher time frames and start with swing trading first. Intraday trading is simply harder and it may not even be fitting for you. I know it may look tempting to sit in front of your computer 2 or 3 hours a day, do 20 trades and make a small fortune every day. Unfortunately, it just doesn't work like that. Most likely you will just overtrade and start losing money quickly. I was also like that in the past. I wanted to do intraday trading. Unfortunately, I wasn't able to make any money with it. I started making money only when I started using the volume profile and when I started swing trading. Yes, I started making my first consistent profits with swings. Only after I mastered that, I worked my way back into intraday trading again, and now I trade both intraday and swing. But I really started making money with swing trading. So, if you struggle, you don't necessarily need to change your strategy or methodology. Instead, you probably just need to slow down a bit and switch to higher time frames. If you are trading using my volume profile strategies, then it is relatively simple. It is because those strategies are so versatile that they work on higher time frames like monthly, weekly, daily charts, as well as on the lower time frames like hourly to 5-minute charts. You literally just need to change time frame and adjust your profit target and stop loss values. So that's about it, guys. I know that taking a beating and being in a drawdown sucks, but it is part of trading. Only the best traders know how to deal with a drawdown and how to dig out of it. Now you know it too, so next time you have a hard time, you are prepared and you will know exactly what to do. Happy trading!